Hello and welcome to CIMA F2 Financial Management. Can we please go to Chapter 8, Developments in External Reporting. This is a final chapter of your express notes for CIMA F2, which you are supposed to have downloaded from where your videos are on our website. Now, this chapter is all about additional reports and additional information that we have to be aware or we have to prepare in order to support various stakeholders to understand better the business and make better decisions. All of you are aware that we have the annual report, the set of financial data, but more and more in today's world, the non-financial information becomes highly important. Also, among stakeholders next to customers and suppliers, local communities, for instance, and society as a whole tends to be more concerned about companies, about their own well-being, and they are following more what's going on with the company. So there is more pressure for more and more stakeholders to provide information. And because all the stakeholders are not necessarily chartered accountants to understand the annual reports, and even if you are, you still need additional information to be able to have a good comprehensive analysis of where a business is as at a point in time, and more importantly, where is it going. So what we'll have below in the chapter, we'll have various reports that are suggested to be used and submitted in addition to the annual reports, and you have to be prepared in your exam to be aware of them, to know them, to mention them and debate their use if need be. Now, the first one is operating and financial review. Remember, this is in addition to the financial statements, which you know, and obviously that show the company group position as at the year end. But then what we would expect in this operating and financial review is the business development and performance during the year, not only in figures, but to explain it also in words, in effect. How did it go? What was the context? What was the competition? Has there been more pressure on your business than any other years? Has the macroeconomic conditions impacted to a large extent, to a low extent? Explain that, assuming that not all stakeholders are chartered accountants. And of course, what you would like also to have in this operating and financial review is the main trends and factors underlying the development, performance and position of the company. So the buzzword here is trends. So how do you share that? Well, it's up to you. The thing is, in terms of guidelines, this reporting is voluntary. So what do you think happens in real life? Businesses disclose minimal information. Why should they disclose more? If they have to do the minimum, they will comply, but that's exactly what they will deliver. However, in order to have a comprehensive annual report, it is believed that this operating and financial review would add tremendous value, and the global reporting initiative, certain guidelines were provided. However, it is not compulsory. Now, you also have to think, and there will always be a debate of the cost benefit, and companies will challenge that. We'll provide all this information to all the stakeholders, but it costs us money. It's time, it's management time, it's just expertise you need to prepare all this information. What's the cost of that versus the benefit of providing to this extent information? Now, I strongly encourage you to visit this website, the Global Reporting Initiative, and you'll find more information about companies that do comply with these guidelines and so on. Briefly, another report that it's a bit of a buzz in today's world is environmental reporting. You know, more and more we are focused on the damage we create to the environment. We want to be more sensitive to the impact we have on the environment, and ultimately this borrowed world we have, not to destroy it, but in fact, if we can help it, support it, enhance the environment we're living in with the companies we work for. So with environmental report, again, it is not compulsory. So where would this leave us? Companies will prepare them, but not all of them. And I'll give you the example of Apple. If you look and Google it and try to find, Apple is not providing an environmental report as such, but you guys know that, or may know, that Al Gore is on the board of directors. So that may tell you that it's a message, maybe cost benefit of writing all these extensive reports is not so beneficial after all. However, does it mean they're not concerned with the environment? Not necessarily. However, the printing and writing and so on did not prove to be beneficial for writing an environmental report by Apple. Okay, this being said, there will be, of course, when you talk about environmental issues, various costs, and I think the most important companies should focus on are cost of preventing, reducing, and of course, if you can't prevent or reduce somehow the impact you have on the environment, you will have to repair the damage. And think of Shell or all disasters that these oil companies suffer when a ship is broken in the ocean, and the damage is caused, and it's irreversible when you kill all the animals in the sea and so on. So what we have to focus on with environmental costs is, can we prevent it? And there are numerous costs that could arise from here, and I'm sure you can go through them and they will seem familiar to you. One thing I would mention here in terms of, can we capitalize the environmental expenditure? It's a very important question. Here I will just mention the fact that if you are in the oil industry and you are exploring for oil, you know, let's say that project will take you 20 years. And you may be aware that at the end of the project, in 20 years' time, you will have to decommission that space and bring it to the normal level that it used to be. So you have to the ground where you drilled has to be brought to certain standards, back to normal or as much as possible, and that will incur certain costs which are typical to the industry. So what do you do in T0? You provide for that amount, so you assess that in 20 years time it will cost you, let's say, $40 million to level out the ground where you drilled. So if you create a provision, you'll say credit provision in T0 when you start the project for 40 million. And what would be your debit? Well, the debit will be the non-current asset, your equipment. So it's a mixture of IAS 37 and IAS 16 non-current assets, whereby you capitalize that expense of decommissioning. And what will happen, that particular expense you capitalize in the value of the non-current asset will be recycled through the statement of comprehensive income as depreciation, through depreciation, year by year. So it will affect that, and you create a matching, because that expense should not hit 20 years time P&L, old P&L, statement of comprehensive income, but it should be sort of matching the life of the project portion by portion. So hopefully that makes sense. And one other type of report, it's encouraged to be used and to be addressed in order to enhance the ability of stakeholders to make decisions on the annual reports as such, is the social reporting. Now, with social reporting, it's again a huge debate. You just have to be ready for a bit of a debate, but you know, you probably are aware Body Shop was very much focused, has been focused on social responsibility, on working ethically and so on, because they wanted to talk to a certain customer base and attract them. And with the social and ethical reporting, there will be arguments from companies. Look, we are creating million employment jobs. Why do we have to invest in social or so-called ethical reports? You know, we do a lot for the society just by setting up those employment positions and giving people a better life with that. So some people would say that, and some people will basically genuinely be convinced that in the long term, the success of their business is reliant on how social and ethical they are. Therefore, they need to prepare, well, they need and they better communicate that attitude and that value in their business, that communicates something to their stakeholders or to a group of them. And of course, some people think, okay, sooner or later the government will require all this, so let's better comply voluntarily in advance. Or some may think, yeah, one day government will ask us and we'll comply just then. Ultimately, human resource accounting. That's an interesting topic, quite controversial, because the key thing here is the whole world evolved towards service industries. Like 20 years ago you had manufacturing, but now most businesses are based on human capital, in effect, and their intelligence. So how comes they are not in statement of financial position? And the key thing here is that, of course, you will say there are advantages in that respect, to recognize those assets, because otherwise it's a huge gap between what the market recognizes as the value of the company and what it values based on the statement of financial position. However, the limitation is that we do not meet the framework definition of an asset, because human beings are not controlled by the entities. So in effect, you're not recognizing human capital. However, that creates controversy, and there is a gap in between the value of these service companies and, as I said, what is valued on the paper, because they don't have many non-current assets and so on. Okay, I will let you to read about the latest development, but I just wanted to mention as you go towards the end of this chapter that you have their Norwalk agreement, and that just gives you a flavor that the American FASB has been working closely with ISAB, trying to make conversion the US GAAP with the IFRS, and you will see a trend whereby certain standards goes towards US GAAP and certain US GAAP approaches move towards IFRS. So ultimately everybody, the whole world, expects to take the best of both worlds, the IFRSs and US GAAP, and bring the final international GAAP for the world to be put together and used. So enjoy the rest of the chapter. Hopefully it gave you a flavor about some issues and what we're trying to achieve with providing additional reports and being ready to debate, because they're not compulsory, should they be done or not, and think of in terms of advantages and disadvantages, cost and benefit in all cases. Well, until the next video up, in case you're reverting back to some other chapters, all the best in your preparation, good luck in the exam, and see you in the next videos. Bye for now.